The Taxpert Profit Extraction app lets you have a look at one of the recurring issues for director-shareholder clients, and that is whether it's better to extract profit from your own company by way of salary or dividend, or a mixture of both. But it also looks at the possibility of extracting profit by way of interest payments on loans from director shareholders. The calculations are based on our Taxpert Calculator app, and they make sure that we get the right figures for tax and national insurance. The Taxpert Profit Extraction app, as you can see on the screen, has got 2 years in each version of it, and we're looking here at the latest version covering both 1920 and 2021. And let me start with the 1920 window. You can see that I can input trading profits. Let's say the trading profits were 85,000 for the year. And there are also fields for inputting salary, employment allowance, that's the £3,000 for 1920, credit against secondary class 1, interest from the company. If the individual has lent money to the company, they could take interest at a commercial rate, retained profit brought forward, and dividend paid out of the company. And then there's also scope lower down to include the director's other income. It may be that they've got self-employment income or other non-savings income, interest, rentals, etc. And then the calculator will work out the tax and national insurance. And you can see already that on the 85,000 figure, what we've done is work out the corporation tax at 16,150, and we've just got retained profit carried forward of 68,850. And then down here, we've worked out the net present value of that retained profit using an NPV factor of 80%. You can change that, of course. Any yellow background cell can be changed. And you can also see that we can, as with our Taxpert Calculator app, select whether the taxpayer is of state pension age or not, and whether the taxpayer is Scottish or not. So the Scottish calculations are fully supported. But rather than put in particular amounts of salary, what I'm going to do is use the optimize function, and that will then work out what the optimum combination of salary and dividend is to maximize the individual director's net income for the year. And the assumptions I've built in are that we will distribute by way of dividend all of the retained profits so that we end up with 0 retained profit carried forward. This uses an add-in to Excel called Solver, which if you've not already got, you can easily activate in your Excel. And it takes a little while for it to whiz and work. So let me click Optimize, and then we'll see what the result is. As you can see in this simple example, the Optimize function tells me that the optimum way of extracting profit is to take director's fees or salary of 8632 and take the balance of the post-tax profits of the company at 61,858. Now, the 8632 figure will be familiar. That, of course, is the earnings threshold for 1920. For secondary class 1, it was the same as for primary class 1 NI at 8632. And so that amount of salary will ensure that there is 0, seems to come up at a penny, of national insurance contributions, both for the director and for the company. If I do the same for 2021, let me put in the same profit figure of 85,000, and you can see there that we've got the same 68,850 as we originally had for the previous year. Obviously, the corporation tax rate hasn't changed. But if I then click Optimize, I wonder whether we'll end up with the earnings threshold for primary class 1, which has gone up to 8788, or will we end up with the earnings threshold for secondary class 1 and trigger a bit of secondary employers' national insurance? That figure will be 9,500. Well, let's click Optimize and see what the answer is. Well, we can see that the calculations tell me that it's better for the director to take 9,500 of salary, even though that triggers £98 of employers' class 1. That may be counterintuitive. It certainly surprised me when I first worked it out, but the corporation tax relief on the additional director's fees make it worth at this level, taking that slightly higher figure. Of course, there are other factors, such as are you operating a PAYE system, that are going to be taken into account. Now, let me show you one or two of the other aspects of this calculator. First, let's look at interest. And a point I've made often is that if a director shareholder has lent, let's say, £100,000 to finance their own company, then it would be a good idea for the company to pay interest at a suitable rate. It has to be no more than a commercial rate of interest. That's a different story. But let's say that this director takes interest out of his own company of £6,000. And what this will enable them to do is benefit perhaps from the savings rate band of 5,000 and the personal savings allowance of either £1,000 or £500. Now, what I'm going to do is put in £6,000 of interest, but before doing that, I'd like you just to note that the net income of the director at the moment is this figure down at the bottom of 61,226. Let's just try to remember that figure, 61,226. If I put in interest of 6,000, the dividend that I previously had will give me negative retained profit carried forward, so I'm going to re-optimize. Now remember that 61,000 figure, 766, when I re-optimize, what it'll do is change the dividend to a figure that will zero the company's profit. I click OK here, and that then zeroes the company, but the net income has now gone up from 61,766, I think it was, to 62,408. So again, the optimal solution is to take a director's income of 9.5, pay interest of 6, and then the rest is a dividend, and you are better off by getting on for £100 a month. So this will enable you to set out for clients exactly what the optimum profit extraction strategy is. If they're Scottish, then there'll be different consequences. You've got full workings. If I look at the 2021 workings and enlarge them for you, you can see how the personal allowance is allocated, how the savings rate band and personal savings allowance and dividend tax allowance come into play, and so on. If I go back, just one other thing to show you, it may be that the client says to you, well, what I want to do is retain the same net income this year as I had last year. And so I've got this equalize function down at the bottom. At the moment, just above that, you can see that their net income has gone up by 1,240. Well, if I were to press equalize, then the algorithm's whiz and whir. What it'll do is tell me the dividend necessary to ensure that we get just the same net income. And that's going to reduce this dividend figure from 56,215 down to 54,379. We've now got some retained profit carried forward, but the net income for the director is the same for 2021 as it was for 1920. So we've done all the hard work in doing all the calculations. You just need to plug in the figures and then print out and discuss with the client.